The question here is, although there is this bilateral investment promotion and protection agreement between South Africa and Zimbabwe, can South Africa afford to give Zimbabwe almost $3 billion?
I think, to be fair, I think South Africa can afford it, given its level of indebtedness relative to the rest of the world as we speak. But the important thing to note there, I think debt would give South Africa significant leverage in the political process in Zim at the moment, which is obviously the intractable part of the problem. So the answer to the question is yes.
Okay. Can Zimbabwe afford to repay South Africa?
Well, as it stands now, no. Although there are fairly firm signs of economic recovery happening there, albeit off a very low base, it still has a long way to run. But the upside potential in Zim is still relatively large, given where it's trying to come from. So, I mean, I would stick my neck out to say that South Africa could even make a return on that investment were certain other conditions met in the political process to allow the economy to fulfill its potential.
Okay, what are those conditions? Because what we do know is that Zimbabwe doesn't have a lender of last resort in the form of a Reserve Bank at the moment. They're a dollarized economy, and effectively the Reserve Bank only acts as some kind of a regulator.
Correct. Therein lies, in my mind, probably the main problem. It's a well-documented fact that Zimbabwean companies and the country itself are suffering from a huge cash flow crisis. And going through a process of capital formation without a lender of last resort is nigh to impossible. The only way around that is obviously to charge ridiculous margins, and that in itself cripples the process that the country is trying to undergo. Without a lender of last resort, obviously banks cannot raise any capital, and institutional and capital flows from outside of the country also can't make their way into the country, because one of the boxes that any investor from overseas wants to tick is that it's going via a credible Reserve Bank system, so it's backed by the country. That is why any money that's making its way to the country at the moment is all private capital. It's making very good margins, but the size of that money going in, because of its nature, is far too small to actually have any meaningful effect on the economy. All
right, the question of the Reserve Bank effectively is a political question, because it's the one issue that ZANU-PF did not want to budge on as a political concession, and the one thing that the MDC is insisting on in terms of further working relations within this unity government. What kind of a compromise is needed in this current situation?
I think the compromise there is really about the management team at the Reserve Bank. Having put Zimbabwe through the last 10 years, there's no credibility left in the Reserve Bank and its management system, which is why it's been removed from the commercial sector of the economy. It's difficult to know what compromise will be appealing to any or both sides, but I think that would be the only one that would give the Reserve Bank any traction.
Okay, so were South Africa to give Minister Biti this $3 billion in a variety of credit lines and an overdraft, how would it be channeled into Zimbabwe without a functioning Reserve Bank?
It will more than likely go via the commercial system, but under the auspices of the Ministry of Finance. And the Ministry of Finance is directly involved at the moment in the banking system, as it were. I don't know of any other line that it would go through at this stage, but that's only because information on this deal is still very lacking. But you've got to remember, Zimbabwe as it stands at the moment has got the least exchange controls on the continent, and all money is only moving through the commercial banking system, which is ideal for where it wants to go right now.
Okay, Andrew, what do you make of all of this? No proper functioning Reserve Bank, and for many investors and indeed taxpayers in South Africa, that's what they need to see, is a credible organization.
Sure, I think it's an emotive issue from a South African perspective. We're coming off one of the, if not the worst strike that we've seen in South Africa's, the new democracy's history. And the amount of money that was being sort of bargained over there was about 3 billion rand. So now suddenly to be having discussions with Zimbabwe about lending that, when government said that they didn't have that money, it draws emotion into it. I think, as Simon quite correctly said, is there's not a lot of detail on it at the moment, so it might be premature to judge the terms and conditions around it. But I think investors quite rightly will look at it and say, historically we have lent some money in the recent past through the African Renaissance Fund to Zimbabwe Zimbabwe, and there were questions about sort of the mechanisms through how it was done. There are questions around political reform, which will definitely be asked. So I think that there's some concern around it, just saying, what is the basis of this deal?
Okay, Simon, in terms of the questions that Andrew is referring to, conditionalities is what people would refer to. This is where it seems as though the South African or the SADC perspective differs very much from the Western perspective. Donors are not prepared to come through from the Western world, and yet Botswana is prepared to come in. South Africa may be coming in to help Zimbabwe. What is it they see that others don't see?
I think at the forefront of that is donor money has simply dried up in the Western world. They simply have enough of their own cash flow issues to deal with. The other is that I think it goes to the core of what SADC are trying to do. This is a SADC problem, and SADC has to be the one to sort it out. And to me, it's a positive sign. It's showing that SADC is beginning to show signs of ownership of their own problems within their own territory, and it's probably time to try and put something together there. I think one of the oldest rules in banking, going back I don't know how many thousands of years, is that he who owns the debt actually makes all the rules. And if the countries around Zimbabwe recognize that, it will give them leverage to go in and actually try and do something with the problem there.
Okay, with the Western governments rather cold towards Zimbabwe, there are experts who are saying that Zimbabwe should consider a credit rating qualification to bring it in line with international standards. What necessary steps need to be taken in this regard? Well,
I think at the forefront of that is still the credibility issue, and you have to have a functioning financial sector with a reserve bank actively involved, not just as a regulator. So there are a lot of homegrown issues that have to be undertaken in order for Zim to even embark on that process going forward. I think we've got a bit of time to waste, but that's where it has to start. There's got to be recognition that the problem started at home, and it has to be the beginnings of the solution have to start there as well.
Okay, so for the South African government and possibly South African commercial lenders that may come into this particular deal flow, what sort of credit rating approach should they take on Zimbabwe?
Well, I suppose it depends on what that money would be spent on. I think, as Simon quite correctly said, it's ideal. You want to have a strong Zimbabwe. I mean, they were traditionally a powerhouse in Africa, specifically in southern Africa. And whilst we've seen a lot of growth in sub-Saharan Africa, it hasn't been as far south as we are. So we definitely want to see that growth and that stability there. I think the key issue around that, though, is once again the mechanisms as to how it's lent. And then the second thing around that would be, does it come from government or does it come from the private sector? And I think taxpayers at the moment would probably be a lot happier if it came from the private sector, where they're taking significant risk as opposed to taking that risk with taxpayers' money.
How open is the private sector to lending to Zimbabwe?
I think that there are still quite a few problems attached in that particular sphere right now. And again, whilst the government here has gone a long way to creating the space for that to happen in legal terms over the last few years, regulatory-wise, the two tend not to go hand in hand. So there are issues here in South Africa which can cause problems there. I think the will is there in the commercial sector here. Whether the money is physically available is another question, but I think the compelling case in Zim right now is your US dollar returns, and with no currency risk obviously attached to that, are actually compelling and attractive, and people are starting to really pay attention to that as we speak.
All right. Now, the government is trying to raise $10 billion thereabouts for what they see as a stimulus that's needed for an injection into this economy. What is it that they need to do? We're often told that they've got good infrastructure in Zimbabwe. It's just to refurbish it.
Yeah, the infrastructure is beaten up, but it's not completely broken. But what the whole infrastructural and the whole country needs, it doesn't matter which sector you look at, is capex to renew equipment and so on. After a lost decade, the state of all of the equipment is, if you look at the railways and even the airline and so on, everything's in pretty much a state of disrepair. Roads and so on, all of those kinds of things that have had simply no attention for 10 years need a lot of it now, and that obviously requires big cash.
All right, so another issue that's needed in Zimbabwe, and this one it just seems to be across the board in Southern Africa, is consistent energy supply. So this is probably the one key area that the government needs to hone in on. But correct me if I'm wrong, Simon, they get a lot of the electricity from Eskom in South Africa.
Correct.
And that throws a spanner in the works in many ways. How can they try to surmount some of these problems?
Well, I suppose that the typical source of funding for something like that, as we saw Eskom do, would be to go to the World Bank. And I suppose the problem at the moment moment is the traditional sources of funding, the IMF and the World Bank, are not really willing to lend on the basis of political concerns. But as we saw in South Africa, where sort of around the 1994 period, and even earlier than that, as we just sort of pulled the reins in on spending on infrastructure, is it's not in the next 2 or 3 years that you see that problem. It's as you start getting into your growth path that you really come into issues. So you're going to have to find, Zimbabwe is going to have to do something about it, but whether the source of lending should be countries like South Africa remains to be seen.
Right, Simon, the Zimbabwean government is said to have entered into an investment protection agreement with a variety of companies across the world to try to attract investment. What are these agreements, and will it respect them?
Well, again, that's always the open-ended question. The government, the previous government, and the one of today still haven't given us a clean track record in keeping to the terms of all of these deals. But the one with South Africa, which is the most important one in my mind right now, was signed somewhere around May or June. Right. I don't think it's actually been tested yet. The advent of indigenization legislation and so on will probably put that to the test. But again, I think that's some way off still. A committee has been formed by the current government to go and relook at the legislation. I don't think that there's going to be any meaningful change in that anytime soon. I don't think that these are problems that we really have to worry ourselves too much about right now. It's that it's a country full of potential is well documented. That it's a country with significant risk is also there. But I would sway towards order being restored over the near term.
Okay, so property rights and just legal tenure. Growth above 5% in Zimbabwe, so that's a good sign. We're told that the mining and the agricultural sector driving this growth. The Minister and the Chamber of Mines expect mining output to increase by something like 33% this year alone. So they're very bullish about Zimbabwe's recovery. If you had to devise a growth strategy for this economy that has mining assets, that has agriculture, that has good infrastructure and a wonderful skills pool, although many have fled the country, what would it be?
Well, I think they've got to get the balance right. I think, secondly, the terms of trade into which they enter, because I think pivotal in this will be their relationship with countries like China in terms of the trade agreements that they have in extracting mineral resources. You know, what are the terms and conditions associated with that? Is it equitable, or does their lack of funding put them in a position where they actually give it all away? Yeah. Certainly, there's opportunity there, and I think, as Simon says, there are risks, but there's massive opportunity up in Zimbabwe, and I think that a lot of people will get involved in that. So manufacturing still under pressure there, but there's a lot of opportunity.
Okay, a growth strategy finally?
Growth strategy for Zim. It's really about recapitalization at this point. I think we've seen there's been a vast improvement in the agricultural sector this year. The tangible increase in economic activity on the ground is largely driven by that in mining right now. It's just a question of feeding all of those businesses and sectors with the capital required to keep going down that road. It's not obviously without difficulty, but quite a little bit of money in relative terms to South Africa and so on will go a really long way there to sorting those problems out. But the strategy should be less government intervention, as always, and try and let the private sector lift this out of its morass.